My advice
My
for the
advice
next
for the next
president.
president.
Next president of the
My
United
advice
States.
to the next
President of the
president of the
United
United
States.
States.
My advice to the next president of the United States is to make corporate tax reform a key priority. The U.S. has been facing much more intense competition internationally over time. Corporate taxes are one of those key issues. Corporate tax rates have fallen around the world over the last 15 years. They're about 30% on average back in the beginning of the 2000s. Today, they're about 23%. The U.S. has continued to keep its corporate tax rate at 35% at the federal level, plus on average around 4% on the state level, being 39%. So we are one of the highest corporate tax areas in the world. And the rest of the world is going the other direction, and of course attracting capital, investment, and of course job creation. A key reform that could be done is to try to make the system much more sensible. One way to address it is to try to reduce the corporate tax rate, particularly for these international activities. Much of the rest of the world is on a so-called territorial system. That is, corporations will have operations in different countries. They pay taxes at the corporate rate in that country, but then they can repatriate, bring back any of the profits to the U.S. and don't have to pay an additional tax on that. So the U.S. has a worldwide system, and under that system, corporations have to pay taxes when they bring back to the U.S., that is, repatriate the earnings that they have in other countries after they've paid taxes on that. That's not typical in other countries. Overall, roughly $2 trillion of corporate funds are held outside of the United States and not brought back to the United States because of our high corporate taxes. For example, there's been one recent proposal to have a significantly lower tax rate in sort of like the 12 to 14% area on repatriated earnings, and that would certainly give more of an incentive to bring it back. So there are a whole variety of things that can be done to try to change the rates and the incentives to get these revenues back to the U.S. Is this the thing that is going to cause the economy to grow at 4% rather than 2%? No, I wouldn't want to make that kind of statement. But is it going to help on the margin to increase investment, increase job creation, and perhaps increase consumption as some of the money comes back and is distributed out through dividends or distributed out through share buybacks? It's going to help.